We have Ross Baird with Blueprint Local. Ross, it's great to see you here today. How are you?
Great to see you, Jimmy. Thank you so much for being the champion of the whole OZ community. It's been a great day. It's been great hearing what everyone's up to.
Absolutely. I mentioned at the start of the day, I think the OZ industry has a lot of momentum heading into next year as we get the new White House administration in place and the new session of Congress in place. Very favorable conditions for tax legislation to get pushed through with potentially opportunity zone extension of the current program and potentially also a renewal, a brand new slate of opportunity zones. We're going to find out a lot more over the next 12 or 13 months or so here. But certainly a lot of momentum on our side within the opportunity zone industry for investors, for developers, and for communities and community residents as well. So we're going to do things a little bit differently with this session. Ross, I don't think, and correct me if I'm wrong, I don't think you have a slide deck that you need to walk through. You're not doing a straight pitch of any sort of, oh, here we go. You actually do
So
have a
I've got slides,
slide.
but they're more. I just wanted to. I think this is a fireside chat, not a fireside pitch. So
It
we
is.
talk. I think I know some of the questions you're going to ask. So I have slides talking about what we're seeing in the market, but I'm going to follow your lead, Jimmy, and then jump to
Perfect.
slides if demonstrations are appropriate.
Ross, Blueprint Local has done quite a few different investments in opportunity zones since program inception, really. And they do have a fund that is open, but the way that it's registered with the SEC, he's not able to pitch it to a general audience like this. So instead, we're going to talk more generally about his strategy and trends. And if you're interested in working with Ross more fully, you can certainly reach out and get more information from him. So, Ross, first question I have for you is maybe you could just tell us a little bit about, in general, background on Blueprint Local, who you guys are, and your overall opportunity zone investment strategy, or how you view opportunity zones generally.
Sure. So we are, you know, Jimmy. In many ways, you and others are the Wizard of Oz. I bring up the Land of Oz because the real lesson of the Wizard of Oz is there is no magic one person who makes it happen. When the wizard leaves, the Scarecrow and the Tin Man end up running the kingdom. So I really think everybody on this call is actually what makes Oz work. There's no one elected official or investor or whatever, but we've been in this ecosystem since the passing of the legislation, and so we have invested about 250 million through funds and direct investment opportunities. Like I said, if anyone wants to get in touch with me directly about what specific investments we're working on, I'll have my contact at the end of this. But I'm more going to talk generally what we're seeing, and what we focus on is primarily multifamily, because I think the biggest impact story of opportunity zones has been a housing story. We have now an estimated 7 million units short of needed housing in the country. That's market rate. That's of all shapes and sizes. That's not just government subsidized affordable housing. It's become a much bigger political issue. It's become a big issue in cities. And probably the best impact stat, and this may have been said earlier, is on the success of the program is 1 out of 5 multifamily housing units under construction are in opportunity zones. The program has been a $100 billion plus stimulus package for housing in the country. So we focus 90+% on multifamily housing. We focus the states that are colored in are where we've made investments or have active pipeline projects. It's largely southeastern Texas, where there's population growth that happened during COVID and I think continues to grow. And where we're especially interested are in projects that are going to take a long time to come together. But the 10-year hold of the Opportunity Zone program really fits how long it will take to make a great project. So for instance, we're invested with a partner called ATCO in a project called Camp North End, which was started 100 years ago in Charlotte as the first Model T factory in the country. It then became a pharmaceutical factory. After NAFTA, all the jobs got offshored. It kind of mirrors American industrial policy. And it was empty. And in 2015, it was the poorest census tract in Charlotte, designated an opportunity zone. And today, this group, ATCO, has developed it into restaurants, retail. We invested in the first multifamily housing phase in the project, and it's gone from Charlotte's poorest census tract to there are 15,000 people on site every weekend. So projects like this in markets where there's growth with a major focus on housing is what we do. We've invested about 250 million in OZ equity.
Right. So let's talk macro for a minute. Let's zoom
Yeah.
out. Let's talk about the macro picture because it's been somewhat turbulent over the past 24
Yeah.
months. We've had a huge run up in the stock market and in other asset classes, but we've also seen rampant inflation, which has now gotten under control largely. We're in a disinflationary environment, but very high inflation a couple years ago, compounded with very high, well, very high is comparative, but
Yeah.
relative, but very high interest rates is coming off of a ZIRP, a zero interest rate policy. Interest rates are starting to come back down now too, but what impact has that macro environment had on real estate development over the last, call it 12 to 24 months? And what are some trends you have your eye on going forward?
Yeah, I mean, one trend is this idea of the rise of the rest. The gateway cities like New York, Los Angeles, San Francisco continue to lose people. Even post-COVID, New York, Los Angeles, Chicago, Oakland, San Francisco losing 25,000 to 200,000 people a year. Cities like Austin, Charlotte, San Antonio, Phoenix, Dallas, your hometown of the Dallas-Fort Worth Metroplex, continue to gain, and in the Metroplex case, over 100,000 new people a year. That was happening before COVID. COVID really accelerated. Post-COVID, you see thousands and thousands of people moving into cities that are booming and thriving. But the impact of interest rates, the collapse of Silicon Valley Bank, a few different macro factors has led the new supply of multifamily housing to decline. We just broke ground this summer on a project in the city of Dallas. 2 years ago, we were told at that time there were a couple hundred projects that had broken ground. We learned at the time that we broke ground there were fewer than 10. There was a 95% reduction in the last 2 years in new buildings that broke ground in Dallas. If you look right here at multifamily building permits, it's dropped as much as 80% in cities, but nearly every city has seen about a 50% decline or more in supply. And so, the housing crisis is only becoming more acute, especially in the cities that are on the upper right-hand corner of this chart. And fewer housing units are being built at the same time. So there's a question on Jill and Catherine's panel, which I thought was fantastic panel. The question was, is now a good time to invest in opportunity zones, or should I wait? And I would say specifically with housing, you've got this issue where you invest in a project, it takes about 2 years more or less to complete. We are facing a boom in population in many cities combined with a cliff in new housing. I think opportunity zones are one of the best tools we have to solve that. And I think that's good for these communities. And I think it's very good for investors to be in the middle of that trend.
And then, I mean, moving forward, are you anticipating that this is going to continue into the future here? I mean, what might happen 2025 and beyond? Some trends that you're keeping an eye on.
A few things. So I do think it is policy wise, and thanks to EIG's coordination, as well as a few other groups, including yours, Jimmy. I spent a lot of time talking with members of both parties. The general consensus from Capitol Hill, and I'm echoing the last panel, is extension is very likely, and a number of both project developers who own OZ sites and investors who are putting money into OZ projects has been, let's wait and see till after the election before making any decisions. And I'd say in terms of inbound activity on both new deals and new capital, my last week post-election has been busier than probably the rest of the year combined. I think there is, I think a lot of markets are momentum based, and I think the momentum has shifted after the election very, very positively for OZs. Now, I do think there is an issue around interest rates really haven't come down much yet, even though there have been Fed cuts. I think banks are extremely conservative and are almost the last to move. But there also haven't been that many projects shopping around banks. It's just been a very stagnant. It's been a very stagnant year. I mean, I know bankers and real estate brokers who say, my golf game or my tennis game has never been better because there's nothing to do. And I think once the market heats up, it will heat up a ton overnight. And I think we will see lending loosens. So I'm bullish. I'm bullish that 2025 will be the most active year in a while.
I share that sentiment. I feel like capital markets have just kind of been frozen the past couple of years, and it's reflected across a wide variety of asset classes. OZ specifically, if you look at some of the Novogradac data, they've been doing this fundraising survey with thousands or over 1,000, I should say, qualified opportunity funds over the last 5 or 6 years. And the general shape of the curve was sharply up and a little bit to the right, and now it's very very flat over the last couple of years. We did
Mhm.
just finally receive kind of an uptick, a little bit of an acceleration in fundraising in Q3. And like you, Ross, I'm hopeful and optimistic that that 2025, some of those capital markets get unfrozen, and we see a rush of transaction and investment activity, investment volume over the next 12-month period here. Certainly, there's some certainty now with the outcome of the election. I think investors are just more certain and more willing to make these types of investments. Rate cuts also help, and some more potentially on the horizon as well. I think that's right. Um, what do you have any more slides that you want to share? Or we go to the
Well, I
questions.
think another trend I'm looking at, most of the interesting OZ opportunities, I mentioned Camp North End. We have another trend, which is we have $1 trillion in infrastructure spending that has been funded, but largely not spent. And if you look at the great urban renewal projects of the last 20, 30 years, take like the Big Dig in Boston, or the High Line in New York City, or the Beltline in Atlanta, they've absolutely transformed both communities, but also real estate values nearby. And so I'll give you an example of our most recent investment, which is in our current fund, Fund 5. The site of the historic Ambassador Hotel in Dallas. You have downtown Dallas, which is some of the most expensive property in Texas. And then across you have the Cedars, where property values are about 20%. And you currently have the interstate cutting off this neighborhood, which is the opportunity zone from downtown. Our site is this red circle. It was authorized in the $1 trillion infrastructure bill, $3 billion to the city of Dallas to basically bury the interstate under the highway and turn it into what will end up being about 3 miles worth of deck park that bridges the highway, much like the Big Dig in Boston, or there's Clyde Warren Park in Dallas. Now, we bought this site for about $92 a square foot. On the other side of the highway, it's $450 a square foot. It might take 10 years, 15 years for that 92 to level out with that 450. It might take 10 years for the park to be built. I mean, the government is not good at building things quickly. But if you take a long time horizon with OZ investments, you can say, hey, we're going to invest in this site and this site and this site and wait. And if we have an incentive that encourages our investors to be patient, we'll see real value. And there's actually a benefit to being forced to wait 10 years.
Yeah, for sure. Well, we have a one or two questions here. That was it. That was the end of your deck. We did good there.
Yeah,
And we're
yeah.
right on time. So please do reach out to Ross. You can reach him at ross@blueprint-local.com. I'll post that link to his email address in the chat here in a moment too. Let's see. I know we had one question here
What
from,
happens if a property in
yeah.
OZ is developed? So we actually have just done this. Our first fund was 5 years ago. We are in 5 years in. We actually got an offer on a property that was attractive and we sold it. You can either reinvest in another OZ deal and it doesn't restart your timeline. We actually found a deal that would have made sense as a 5-year hold. So you essentially get 2 round trips of capital. Or you can distribute the money to everybody and they pay the tax as if it were just a good deal that was not tax advantaged.
Good. Great answer there. And then let's see. We got one comment in the Q&A section here from Tom. He just says, "Great webinar for an OZ rookie like myself. I'm getting what I was hoping for and more out of the day. I'm sure I'll be back connecting more with you and your website, podcast, and learning more about the OZ sector and future investment opportunities." So thanks, Tom, for following, and thanks everybody else who's been engaged with us today. Ross, I know we did a podcast interview a little while back. I'll post a link to that as well in case anybody wants to learn more about what you guys have been up to lately. But any final words before I cut you loose here? Because we are at
No,
time.
so we're working on active deals. If this generally sounds interesting and you want to talk about specific things we might do together, please be in touch. If you're a developer with a deal, we'd love to talk about whether we can invest. If you're interested in investing, we'd love to talk about what we have on our plate. It's just great to see the whole OZ community together. And Jimmy, you're an amazing TV show host. So thank you for hosting a great day.
All right. Well, thank you, Ross, and thank you for your support of OZ Insiders. You're a member of my OZ Insiders group. It was great seeing your partner Kevin at our dinner last week in Washington, D.C. We'll have to try to get you out to the next one. I understand it was your birthday though, so happy birthday.
It was my birthday, so I love OZs, but my kids wanted to celebrate. But I also I love my kids more than I love OZs, but OZs are second place.
Fair enough. I think I share the same sentiment. Love my kids first, and then OZ's close second for sure.
Yeah.
Ross, really appreciate it. Thank you.
Thank you, Jimmy.